Hey RRT family, Ryan Reynolds here with Keller Williams Consultants Realty in your April 2022 market update. So, first thing I want to do is say thank you to all of you who came out to our client appreciation event this past weekend. I had a great time. It was really good to see everyone. Hopefully, you guys enjoyed the movie, and we continue to plan on doing that next year. And we've actually planned on doing it every year, but it was really good to be able to do it this year since the pandemic had really prevented us from doing that for a couple of years. So, in any case, great to see you all, and thanks again for coming out. Now let's talk about real estate. So there's really three things in real estate that I want to talk to you about. The first one is going to be our interest rate situation. The second one is going to be our supply and demand situation. And the third thing are some outside factors that are influencing our real estate market. So let's talk about interest rates first. So when we think about interest rates, the reason why they're important is because they drastically impact affordability. As interest rates rise, the amount of home purchasing power that a buyer has goes down. And with the cheap money we've seen in the past few years, that's really contributed quite a bit to the rising of prices. And last year, we actually saw right around a 12.5% price appreciation in the greater Columbus area. And this year, we're probably only predicting to see around 5 to 7%, which is still better than the normal 4% that we predict from a historical standpoint. So, in any case, those interest rates have been rising from about 2.89 early in the year to almost around 5% right now. That doesn't seem to have impacted the ability of people to get loans or the demand side of the equation when we think about supply and demand. We still got lots of buyers in the market, and part of that could be because people are having FOMO of missing out on buying a house. They're afraid that rates might get so high that they won't be able to buy anything at all and they'll have to be a renter for their entire life. So that will probably continue for a little while, but as rates continue to rise, I do expect it to have some sort of an impact on the amount of demand in the market, and in that it'll come down as interest rates top out. So let's talk about the supply side of things. So when in the supply and demand equation, obviously supply is half of that, and right now our supply is very low. We're continuing to see not very many homes stay on the market, and our active number of homes for sale has been usually bottoming out beginning of the week around 950, 975 homes. Now toward the end of the week, those pop up to the 1500 or 1600 level, but by the end of the next weekend, most of those homes are going into contract because the demand is so strong that they're still flying off the market. So supply is continuing to stay low, and we're not really seeing any help from the builders on that too much either, because the homes that they are building are in the 400 and up range, which eliminates a lot of first-time home buyers and even a lot of second-time home buyers. But it's also the fact that they are not able to build them fast enough because of all of the supply side issues, supply chain issues that they've been having in that industry. So supply side, not looking great. I don't expect to see a lot more homes come on the market, and I would expect that to stay low, which would then lead me to believe that we're going to still see quite a bit of price appreciation this year. So the last thing I want to talk about are outside influences on our market, and we have a lot of those here in Greater Columbus. One of the big ones being Intel. So Intel coming here, we've already heard they're probably going to be coming with around 10,000 additional jobs to the area. Those people are going to likely want to buy houses, and that's going to impact our demand. Another thing that's been a big problem or a big influence is that corporate investors have been moving into Columbus quite a lot and buying up most of the homes, or at least trying to buy a lot of the homes under about $350 to $400,000. They're paying pretty good money for those homes. They're paying cash, and so that's pushing a lot of other first-time home buyers and even second-time home buyers out of that market. And so that makes it even more difficult to buy a home right now. And the third thing, obviously, is this whole global situation with Ukraine and Russia. That's impacting the price of oil, which impacts people's psychology, as well as making people feel less steady in the market. If that were to somehow get resolved, I think that would be a great thing because it likely would then lower oil prices, which makes people feel better. And funny enough, oil prices seem to really impact the activity level in real estate. I don't know why, but I've just always noticed that. So those are the three things that are impacting the real estate market in April 2022 that I think you should be aware of. Now, if you have questions about your specific situation, please feel free to reach out. Give us a call. We'd be happy to sit down and talk with you about your specific situation and custom tailor a solution, a real estate solution for you. Just remember, it's the Ryan Reynolds team, unlimited opportunities, exceptional experiences.